shot. I am not throwing away my shot. Hey, yo, I'm just like my country. I'm young, scrappy, and hungry, and I'm not throwing away my shot. I'ma get a scholarship to King's College. I probably shouldn't brag, but dag, I'm amazed and astonished. The problem is I got a lot of brains, but no polish. I gotta holler just away my shot. Hey, yo, I'm just like my country. I'm young, scrappy, and hungry.
Gotta get rid of that. Sorry, my friends. Hello, retail investors.
To be heard with every word I drop knowledge. I'm a diamond in the rough, a shining piece of coal, trying to reach my goal. My power of speech unimpeachable. Only 19, but my mind is older. These New York City streets get colder. I shoulder every burden, every disadvantage. I've learned to manage. I don't have a gun to brandish. I walk these streets famished. The plan is to fan this spark into a flame. But damn, it's getting dark, so let me spell out the name. I am the A-L-E-X-A-N-D-E-R. We are meant to be a colony that runs independently. Meanwhile, Britain keeps shitting on us endlessly. Essentially, they tax us relentlessly. Then King George turns around, runs a spending spree. He ain't never gonna set his descendants free. So there will be a revolution in this century. Enter me.
He says in parentheses.
Don't be shocked when your history book mentions me. I will lay down my life if it sets us free. Eventually, you'll see my ascendancy. And I am not thrown away my shot. I am not throwing away my shot. And yo, I'm just like my country. I'm young, scrappy, and hungry, and I'm not throwing away my shot. I am not throwing away my shot. I am not throwing away my shot. And yo, I'm just like my country. I'm young, scrappy, and hungry, and I'm not throwing away my shot. It's time to take a shot.
I dream of life without a monarchy. The unrest in France will lead to anarchy. Anarchy, how you say? I use anarchy. When I fight, I make the other side panicky with my shot.
Yo, I'm a tailor's apprentice, and I got y'all knuckleheads and local parentis. I'm joining a rebellion, cause I know it's my chance to socially advance. Instead of sewing some pants, I'm gon' take a shot.
And but we'll never be truly free until those in bondage have the same rights as you and me. You and I do or die. Wait till I sally in on a stallion with the first black battalion. Have another shot.
Geniuses, lower your voices. You keep out of trouble and you double your choices. I'm with you, but the situation is fraught. You got to be carefully taught. If you talk, you're gonna get shot.
Bird, check what we got. Mr. Lafayette, hard rock like Lancelot. I think your pants look hot. Lawrence, I like you a lot. Let's hatch a plot blacker than the kettle calling the pot. What are the odds that God will put us all in one spot? Pop in a squad of conventional wisdom, like it or not. A bunch of revolutionary manumission abolitionists. Give me a position, show me where the ammunition is. Oh, am I talking too loud? Sometimes I get overexcited, shoot off at the mouth. I never had a group of friends before. I promise that I'll make y'all proud.
Let's get this guy in front of a crowd.
I am not throwing away my shot. I am not throwing away my shot. Hey, yo, I'm just like my country. I'm young, scrappy, and hungry, and I'm not throwing away my shot.
Cheers.
I am not throwing away my shot. I am not throwing away my shot. Hey, yo, I'm just like my country. I'm young, scrappy, and hungry, and I'm not throwing away my shot.
Everybody sing. Whoa, whoa,
Whoa,
hey,
whoa, whoa.
say let him hear you.
Yeah.
Let's go. I said shout it to the rooftop. Sit to the rooftop.
I gotta stand up for this. I got too much fucking energy right now.
Let's go.
Rise up when you're living on your knees. You rise up. Tell your brother that he's gotta rise up. Tell your sister that she's gotta rise up.
When are these colonies gonna rise up? 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 Rise up!
I imagine death so much it feels more like a memory. When's it gonna get me? In my sleep, 7 feet ahead of me. If I see it coming, do I run or do I let it be? Is it like a beat without a melody? See, I never thought I'd live past 20. Where I come from, some get half as many. Ask anybody why we live it fast and we laugh, reach for a flash. We have to make this moment last. That's plenty. Scratch that. This is not a moment. It's the movement where all the hungriest brothers with something to prove. When's foes oppose us, we take an honest stand. We roll like Moses, claiming our promised land. And if we win our independence, that a guarantee of freedom for our descendants. Over the blood we shed, begin an endless cycle of vengeance and death with no defendants. I know the action in the street is exciting, but Jesus, between all the bleeding and fighting, I've been reading and writing. We need to handle our financial situation. Are we a nation of states? What's the state of our nation? I'm past patiently waiting, I'm passionately smashing every expectation, every action's an act of creation. I'm laughing in the face of casualties of sorrow. For the first time I'm thinking past tomorrow.
And I am not throwing away my shot. I am not throwing away my shot. Hey yo, I'm just like my country. I'm young, scrappy, and hungry, and I'm not throwing away my shot. We gonna rise up, time to take a shot. We gonna rise up, time to take a shot. We gonna rise up, rise up.
It's time to take a shot.
Rise up, rise
It's
up.
time to take a shot.
Rise up,
It's time to take a shot.
rise up.
Take a shot. Shot. Hey yo, it's time to take a shot. Time to take a shot. And I am not throwing away my shot.
Well, thank you for joining us, ladies and gentlemen, retail investors. As you can see, there is quite a bit of volatility going on in crypto markets. And my ex-girlfriend, old Yeller, Janet Yellen, has specifically told you guys in front of Congress, in front of the CARES Act, that stablecoins are the number one threat to financial markets. And over-leveraged hedge funds are the number two threat to financial markets. AMC earnings call starts in about 23 minutes. Disney's earnings call starts pretty soon as well. Theirs starts in about 8 minutes or so, but I'm not overly concerned about that. Did you guys really think that this executive order was over? Did you think that this just didn't happen? Because I've got a few things to tell you. China's preparing for war. Okay, President Xi Jinping just came out today and stated specifically that China is preparing themselves for war. China will focus on preparing for war on a recent article released by Daily Mail just about 4 hours ago. Big shout out to Aaron Brickman for bringing that up to me. And Sean Wenzel for making this badass Evergrande Contagion Executive Order 14032 crisis mode graphic. China military collateral. Oh, that is definitely going to take a massive negative hit, and it's going to be a big impact on our markets here in the United States. The current situation we're looking at, fastest rising interest rates in history in any recession. And as a matter of fact, it's a depression. We just haven't been told that yet. Credit card debt for Americans is at an all-time high, $930 billion. Mortgage demand is at the lowest rate it's been since 1997. The bond markets are on track for their worst year since 1786. 1786. I'm not throwing away my shot. Tech stocks are trading like it's 2001 all over again. Twitter's laying off 75% of their employees. Apple and Amazon have a freeze on hiring. Snapchat laid off 20% of employees. Meta's laying off thousands of employees this week. Microsoft layoffs have begun, and Intel is also laying off 20% of employees. What do you guys think's about to happen? Do I have to spell it out? But here, you know what? I guess I will spell it out if I have to. Chinese property developer Hellenberg has not paid its $14,850,000 payment of interest alone on their dollar bond by the end of the 30-day grace period. This was on Monday. This is triggering an event of default due to the macroeconomy, real estate market, and financial environments, according to their filings. Damn! Another one bites the dust. Are you surprised? I'm not surprised. You know what? Since we're rocking some music, we're gonna be so fucking rich.
We're gonna be so rich. We're gonna be so
Big
rich.
shout out, Phil,
So-
for real.
So goddamn rich. We're gonna be so rich. We're gonna be so rich. We're gonna be so rich. So goddamn rich. Get that money printer. Yelling. Yeah. Get that money printer. Kenny. Ha. Get that money printer. Jay Powell. Get that money printer. Yeah. Janet yelling, never telling, but she always fucking selling BS. She don't wanna see us, let her phone free us. Powell acting foul, time to throw in the towel. Dark money, bringing power, reverse repo by the hours. 100 bands, 2 tickers, plenty booms, plenty strippers, 80 moons. I'm a tipper, I am the butcher, I will sticker. And they convinced through the lid exchange. I am the butcher, bringing the pain when it's over. Please remember that name like a ran through like you're not walking the same. Damn, we're gonna gonna be so rich.
Phil.
We're gonna be so rich.
Oh, that's
We're gonna
fire.
be so rich.
Fucking
so,
lit.
So goddamn rich. We're gonna be so rich. We're gonna be so rich. We're gonna be so rich. So goddamn rich. Get that money printer. Yelling. Yeah. Get that money printer. Kenny. Ha. Get that money printer. Jay. Powell. Get that money printer. Yeah. Go get my shit, man.
Jerome Powell, get the fucking money printer out.
Get my motherfucking money. Cover them short, stop propping the market. I know you gotta do this for midterms. We know what's up.
Shout out to Phil for real. Badass fucking song, bro. Badass song. I have a feeling a lot of people are gonna be doing that right there. Swimming in their fucking piles of cash and silver and gold bars. My little one wants to come in, but I can't let her in right now. I will later on. Evergrande has been forced to sell a project at a loss of billions. The struggling real estate giant has been forced to sell a plot of land in Hong Kong that was intended for a castle. Excuse me 1 second.
It says not later, now.
I'm the boss.
My little one is angry, my friends. But you know what? One of the best hedges that's going on right now? These puppies right here. See these? Silver. Badass. Heavy. Beautiful. Needed for everything right now related to tech, batteries, semiconductors, you name it. Buy yourselves some fucking silver if you want to hedge. I'm not a financial advisor. Silver could collapse before it runs. But I don't know if you've been looking at it in the last few days. That shit hasn't collapsed. The premiums have gone up. The price of silver's gone up. And things have just gotten more and more exciting every single day. Big shout out to my buddy Cash Money here. This is one of my favorite coins right here. It's actually not a coin, it's a round. It's the Don't Tread on Me round. I absolutely fucking love this thing. And on the back, it's even more symbolic. I've got the Boston Tea Party, 1776. Fucking love these things. But you can't beat these. You can't beat actual precious metals. The fiat cannot compare. The fiat does not compare. All right? Keep that in mind, ladies and gentlemen. Somebody said they buy their grandkids silver every holiday. Why bother? That is a great, that's his name. That is a great thing to do, I think, for your grandchildren. I think silver.
It's a beautiful metal.
That's a beautiful gift and a beautiful metal, as right. So yeah, Evergrande just lost the property that they were going to build a castle on. A fucking castle. In order to just barely pay off their loans, and they're still in default. They are no longer trading. Please, guys, watch your mics if you're in the chat. Appreciate you. Why is this a big deal? Well, it's a huge deal because during the second quarter of 2022, the four largest commercial banks represented almost 89% of the total banking industry notional derivatives amounts. That means debt, ladies and gentlemen. It's all rehypothecated bullshit, and they have 66% of the current credit exposure. Net credit exposure out of the 1,258 insured financial holdings companies in the market. These numbers don't lie. I figured this out last May when I was looking at these numbers in 2021. I realized, 2008 never went away. 2008 has not gone anywhere. They just kicked the fucking can. And now that hyperinflation is here, and you guys haven't even seen hyperinflation yet. You've seen inflation, and they're talking about a downturn in it. There's not going to be a fucking downturn except for maybe a little blip. This hyperinflation that you're going to see in the next 6 months to a year is going to blow your fucking socks off. So make sure you're properly hedged. And that's what we're here to talk about. What I'm hedging, what other people are hedging for, and to give ideas and education. And we're looking forward to the AMC and Disney earnings calls as well. Precious metals contracts have increased by over 400% as central banks and governments are scooping up all of the precious metals and the contracts in, SLV and PSLV and things like that as well. Those numbers don't lie. I did a full write-up of the derivatives explosion on Reddit. You guys can check it out there. It's called The Complete Bull Thesis on AMC, GME, and Precious Metals. And don't forget, Thomas Peterfy, the CEO of Interactive Brokers, when he was questioned about the position close only status of GameStop, AMC, and COS in January 28th of 2021, said, quote, "I was scared of a domino bankruptcy. I tell you, the rules require the long brokers to go into the market and buy the shares at whatever price." So that drove the GameStop shares up to $480. And then suddenly, I guess, it didn't go further, but it could have. And he took a nice long pause there to rethink what he was about to say, because he was going to say, suddenly we pulled the buy button, but he realized that was probably the worst thing he could possibly fucking say, and ended up saying it didn't go further, but it could have. The French Minister of Economy has said that a strong response against the American green policy is needed to ensure industrial production. Trade war around the corner? Absolutely. Don't buy the climate change bullshit. Don't worry if you don't agree with me. That's fine. We don't have to agree on everything. But all the smartest people in the world know that it's bullshit, even though they've told you otherwise for decades. ExxonMobil. Nobody's known about this. This only has 25 likes and 12 retweets. ExxonMobil Folly in the UK says, "We're currently dealing with an operational matter on site. Our teams have responded and are working to address the situation. Our on-site siren may be audible and is part of the procedures." There is going to be a huge, huge shortage of oil. ExxonMobil's Folly plant is currently down. FTX appears to have stopped withdrawals. What is the fucking price of FTX right now, guys? Is it like $8 a coin? It was at $22 yesterday, and then today has collapsed down to about $8 a coin. And ZZ Binance has the opportunity to buy them, but can pull out of the deal at any minute. So if they're already at $8, Bitcoin's at 18,252. Ethereum has dropped 16% today to 1,314. Bitcoin Cash is at 102, down 13.5%. Solana, one of the largest holdings of crypto holdings of Citadel Securities, per my understanding, is down 24.91% today. And FTX has stopped processing withdrawals, on-chain data shows. They have stopped processing withdrawal requests, according to on-chain data, and the last outgoing transaction took place at 6:37 a.m. Eastern time today, because they're fucked. This isn't something that I'm just coming up with. The United States Treasury and the Federal Reserve know exactly what's about to happen. Here is Janet Yellen testifying in front of Congress on the CARES Act, September 28th, 2021.
COVID-19 pandemic, of course, the most significant shock to the U.S. and global economy in the last 2 years. Beyond COVID, what do you assess are the most significant systemic risks or threats to financial stability in the U.S. and globally?
When I think about systemic risks to the financial system, I always think about cyber risks, really more than anything else. We have a very highly capitalized banking system, one that is much better at measuring its risks, so that more traditional making bad loans, losing money, and things like that, that'll happen, but the banks are really well fortified against that. The risk that we haven't really faced the full brunt of yet is a successful cyber attack on a financial institution of some kind, be it a financial market utility or a bank or another financial institution. And, you know, we work closely with Treasury and other agencies all around the country.
The same question for you, please, other than the ongoing COVID-19 pandemic and the terrible economic toll that it's taking and the terrible health toll that it's taking. Looking more broadly, what do you assess to be the most significant systemic risks or threats to financial stability?
I think there are threats to financial stability that have come from the growth of activity in the shadow banking sector. We saw some of those threats emerge during the onset of the pandemic. We have, for example, open-end bond funds that guarantee daily redemption, saw massive withdrawals by individuals who wanted to flee to cash, and that can trigger fire sales of assets with systemic consequences.
Ladies and gentlemen, we're talking financial runs.
The Financial Stability Oversight Council that I head has taken that up as a topic that we're looking at and examining. There are issues relating to hedge funds and the possibility of leverage there that can trigger financial runs. That's another topic. And more broadly, climate change over time is, I believe, could be a significant risk to the financial sector.
She's not talking about climate change in regards to the weather. She's talking about the climate of the financial system. She's talking about over-leveraged hedge funds and stablecoins providing the number 1 and 2 risks to the financial markets because they already know what the fuck's happening. You guys just saw it happen with all these other coins. You guys saw it with Luna. You guys saw it with multiple. Now we're seeing it with FTX. Multiple different coins, one after the next. First the stablecoins, then the hedge funds. And at the same time, UBS, the UBS Bank's chief risk officer, has quit to become a professional photographer. Rats flee the sinking ship. We just found out that UBS chief risk officer Christian Blum has resigned from the Swiss bank to become a full-time professional photographer. The unusual career change will lead Blum to opening a studio and gallery in Zurich's Historic Center as he swaps capital ratios for aspect ratios. He will leave the bank in May to focus on his business and other opportunities. Well, congratulations to him. I'm sure it's got nothing to do with their poor financial position and their trillions of dollars in derivatives. Gensler's warning to market players. The SEC's crackdown is just getting started. Chair Gensler told securities lawyers on Wednesday that his agency would continue to pursue violations wherever and however they occur. Stern warning for market players. They're just getting started on this crackdown. They said, make no mistake, if a company or executive misstates or omits information material to securities investors, whether earnings calls, social media, press release, we'll pursue them for violating the securities laws. Their staff filed more than 700 actions in the government fiscal year, winning judgments and orders totaling an all-time record of $6.4 billion. $6.4 billion. And when they pay those fines, you know who it goes to? It goes to that bitch right there, Janet fucking Yellen.
Threats emerge during the onset of the pandemic. We have, for example, open-end bond funds that guarantee daily redemption, saw massive withdrawals by individuals who wanted to flee to cash, and that can trigger fire sales of assets with systemic consequences. The Financial Stability Oversight Council that I head has taken that up as a topic that we're looking at and examining. There are issues relating to hedge funds and the possibility of leverage there that can trigger financial runs. That's another topic.
Oops, she doesn't want to talk about that anymore, apparently. AMC earnings call starts in about 6 minutes. Who's that in the chat? Anybody? All right, please keep it down. Keep yourselves muted if you don't have anything to say immediately. But by all means, you're welcome to jump in. Guys, this situation is so bad that 40% of small businesses couldn't pay their whole rent this last month. And 37% of real estate agents couldn't pay their rent in October either, up from 27% the month before. Real estate and small businesses are in terrible shape. The U.S. Strategic Petroleum Reserve has been drained for the 60th consecutive week to the lowest level in 40 years. 33% decline this year is the largest on record. Supposedly it grows the economy and benefits everybody. 62% of real estate listings in Phoenix, Arizona have a price cut. That's the highest ever on record. Nearly every zip code in Phoenix has a price cut share above 40%. Some as high as 80% price cuts. 80% price cuts, ladies and gentlemen. The Phoenix crash is not sparing anybody. Don't worry, that's not all. Austin, Texas, 65% of listings have a price cut, with nearly every zip over 40%. Some even as 100% of listings. Some zip codes have 100% of a price cut. Not 100% price cut, but some zip codes have every single house has had a price cut. This is directly from Realtor.com. I am a former realtor, so it's great to see people like Nick Jarrell here sharing this information as well. Not to mention, I own a logistics company called Hotshot Expediting and Logistics. There has been 75% fewer vessels this year than last, year over year, containers. Change from previous week was down 73%, and from the previous year was down almost 76%. Make sure you're properly hedged, ladies and gentlemen. The depression is just getting started. There is no diesel fuel in Pennsylvania, Tennessee, South Carolina, Ohio, amongst others. I've got truck drivers over there in Pennsylvania right now. They're telling me they're paying $7 a gallon for fucking diesel in Pennsylvania, where it should be $3 a gallon. Shit. AMC's earnings call starts in about 2 minutes. Just jumping real quick on the Disney earnings call. AMC and Disney Plus have partnered up to offer free trials of Disney Plus.
Range of brands, franchises, and distribution channels. ABC ended the season as #1 in entertainment programming for the 3rd consecutive year, and ABC News continues to be the most trusted source in news, with the #1 positions across all day parts. Theatrically, Thor: Love and Thunder, the character's 4th standalone film, earned over $760 million worldwide. This is our first time we released a 4th film based on a single Marvel character, and Thor's longevity is a great sign for Marvel and our ability to tell stories based on its characters long into the future. The 4th quarter was also the first time in Disney history that we released tentpole original content from Disney, Marvel, Star Wars, Pixar, and National Geographic, an indication that we are now at full cadence of new releases as we hit our steady state. As evidence, Hocus Pocus 2 was a smash hit, becoming not only the most watched premiere on Disney Plus, but also a Nielsen record-setting streaming movie with 2.7 billion minutes viewed in its first weekend.
Wow.
And Marvel Studios' Ms. Marvel completed its run in July, and She-Hulk Attorney at Law debuted in August, contributing to subscriber growth and driving substantial engagement. Lucasfilm's Andor, a spy thriller that explores the backstory of Cassian Andor, a popular character from Rogue One, earned rave reviews and showcases our ability to extend stories from the big screen to our streaming services. Turning to general entertainment, the critically acclaimed Prey from 20th Century...
All right. We're going to call it right now on Disney. Sounds like Disney, Thor, and all their other movies and their Disney Plus partnership is going really well. We are looking at a lot of positivity in the movie theaters and in the entertainment industry, and it is only natural and makes perfect sense that AMC and Disney Plus have partnered up to offer free trials and such. And I have a feeling that they might partner up a little bit more in the future. Head Plank asks for hiring more over-the-road haulers after this diesel disaster. Just left my silly company. I'm sorry, my friend. We're not, but not many people are at the moment either. But we're about to get started. We got 15 seconds as the AMC earnings call starts up here. I'm going to turn up the volume on my desktop audio for those of you that are asking. Thank you for the heads up in the chat, everybody. Welcome, retail investors. This is my shot, and I'm not giving it up. I'm not throwing away my shot.
Hey, Marcel, we're going to have a little bit of time. They're going to open up the lobby here in 20 seconds, and it's another 15 minutes till the call starts. But we do have the earnings information in hand.
Beautiful, bro. Yeah, you want to share it with everybody, Pantheon?
Yeah, we can take a look at this stuff here right now.
Yeah, huge shout out. Everybody, give it up for Pantheon AMC right here. Give it up for my man. Thank you very much, brother.
One of the first things that people are going to want to know, of course, is we beat projected earnings for the quarter. So they projected us at a loss of negative 24 cents, and we came in better than that. We actually beat that by 20 cents. We came in at 20 cents under rather than 24 cents. Sales of 968 million versus 961 projected.
Slow down, brother. So you're saying that earnings per share was estimated to be a negative 24 and it was at negative 20. This is obviously bullish because earnings were better than even projected by Wall Street. Is that correct?
That's correct.
Thank you, brother. Continue.
Another thing that people are going to want to know about, how many APE units did the AMC sell into the market? And we've got that knowledge now. They've only sold 14.9 million APE units of the preferred equity units into the market. Of the 425 million, only 14.9 million were sold at a price of a total of 36.4 million. Now we know that they put that release out September 26th, so that tells us they either sold them right after, leading up to October, or they potentially sold them around, October 19th, 2021. In that time frame, there's two different frames where we hit a price of an average of about $2.44 a unit. So 14.9 million APE units sold into the market at an average price of around $2.44 for 36.4 million of capital. That's a whole lot of APE units left to deploy. That's been a question a lot of people have been talking about.
Say that one more time, that last part, one more time for me, a little bit slower.
Sure. Of the 425 million APE units that Adam Aaron has allowed Citi to sell into the market when AMC directs Citi, only 14.9 million APE units have been sold as of November 8th today. So we got 425 million, only 14.9 million units have been sold.
Fantastic.
For a total of $36.4 million. It's an average price of around $2.44 an APE unit.
It's fucking solid, man. That's great. The cheaper that APE is picked up by AMC, especially for their employees, if it's converted to from APE into AMC, that would be a huge increase in gains for them, wouldn't it?
Oh, yes.
There we go.
I'm going to throw the PDF of this release into your DM.
Great.
So you can pull it up.
Great, thanks.
Yep, it's there now.
Let's get that pulled up. Close out some of these tabs real quick while we wait. I'm gonna leave that one open. So we got more people in the group now here. And we're just waiting for it to start up. You can hear the music in the background. That's from AMC's earnings call. We'll be listening to it live right now.
Is a topic that we're
Old Yeller doing her thing, lying to Americans. Damn, is she good at it. Where'd that fucking meme go? There it is. That's great. Somebody in the think tank just made this. You guys are too much. Apparently, I'm winning the AMC market crash game. Fuck yeah! Fuck you, Kenny! Pay me my money! Gary Gensler, I want my whistleblower money. Phenomenal. Thank you, guys. You're too kind and too funny. Pantheon made this. You're a freaking legend, Pantheon.
You got a hell of a score.
Yeah, you know what? Cheers to that. Cheers to that, brother. I'm going to have to celebrate for the 69,420 score that I've got on the AMC market crash game. Because, yeah, it ain't looking so good for Solana and Meta and all the rest of Kenny Boy's top earnings. I'm sorry, top holdings. Oh, that's fucking great. Hey, is AMC Bigums in here? Hop in the chat, brother. Say what's up to the fam. Everybody loves hearing from you.
Tom D in the chat's asking if there's a breakdown of who purchased the 14.9 million ape units that were sold. There's not on this press release, but maybe Adam will tell us something in the earnings call in about 10 minutes.
Mm-hmm. Keep in mind, if you're just joining us, the whole reason we're talking about this is because stablecoins and over-leveraged hedge funds are the number 1 and 2 contributing factor to instability of financial markets.
Threats emerge during the onset of the pandemic. We have, for example, open-end bond funds that guarantee daily redemption.
In the chat, Roadhouse is asking, why sell that low at $2.44? You had it at $10.
And that can trigger fire sales of assets with systemic.
Treasury and other agencies all around.
My apologies if that was a little loud.
From the growth of activity in the shadow banking sector, we saw some of those threats emerge during the onset of the pandemic. We have, for example, open-end bond funds that guarantee daily redemption. Saw massive withdrawals
RRP, is it?
By individuals who wanted to flee to cash, and that can trigger fire sales of assets with systemic consequences. The Financial Stability Oversight Council that I head has taken that up as a topic that we're looking at and examining. There are issues relating to hedge funds and the possibility of leverage there that can trigger financial runs.
Oh, my apologies. I almost didn't realize that. Hey, Pantheon, we're back, brother. Would you please start over? Pantheon, my man, we are back. If you could repeat that for me one more time, I apologize. I was playing a video. Didn't mean to cut you off.
No, my bad. I couldn't hear the video playing. Sorry about that.
No problem at all.
Roadhouse in the chat was asking, why sell that low at $2.44? You had it at $10. Well, that's because the issuance of these to be even sold into the market wasn't even set up until September 26th. So that's when they filed the ability to sell up to 425 million of the ape units through Citi. So it wasn't a matter of they could have sold them earlier. I mean, they could have probably filed this earlier, but it wasn't until September 26th that they even put this out for the ability to sell these units into the market. Right? They have to put these out as advance notices.
Yep. Dang. Hey, somebody get Irish F out of the YouTube. He's a shill. Pop him out of here. Don't need that nonsense in here. You take people still like to pretend like they know everything, and unfortunately they do not. So get the fuck out. Thank you, my friend. Pantheon, that's great to know, my friend. And it's not something that can just be issued and distributed immediately. There's got to be advance notices. Someone's asking, how is this not dilution? Ladies and gentlemen, I know you don't understand this because hedge funds have put it into your heads that dilution is bad. But every time AMC sells shares, we make fucking money! Shitloads of fucking money! I remember the call contracts I was buying in in May of 2021, shooting up from the $4 contracts. Man, I think when AMC was still at like $10 a share, $11 a share, I was buying those things for $20, $23 a piece. And then I was selling them for $6,000 a contract when AMC was in the $70 range. The more that AMC sells shares out on the open market, the more the AMC's price will go up. Thank you to the mods. You guys are the best. Diaz, Pantheon, everybody. Lawless, appreciate you in the chat. Thank you for looking out. We got Wolfie, Road Dog, Pantheon, Queen Bee, all my fucking good friends here. It's great. Johnny, Exact Perspective, Team Voltron in the house. Fucking awesome. Coley Marie from Twitter. Cash Money, the one and only, man. I'm so proud to be here with all you guys right now. And I could not be happier. It's always darkest before the light. We are in the eye of the storm, ladies and gentlemen. A market crash situation. And again, I will say this one last time. The reason I've been telling you since 2021 that AMC will go down with the market and then squeeze is because that's what I truly believe. I'm not a financial advisor. This is not financial advice of any kind. Do your own due diligence. But every time there's a market crash, it is usually followed by a short squeeze, just like Volkswagen in 2008. September 28th, the stock market hit some record lows of 2008. Sorry, September 28th, 2008. The stock market hit record lows. And October 29th of 2008, Volkswagen shot up and started squeezing. And on that date, they reached a settlement with the government of $1,000 a share for Volkswagen. This is not something new. This happens all the time when there is a loss of liquidity in financial markets. Janet Yellen just got done telling us. You guys just heard it from the horse's mouth. Let's take a look. Bitcoin hanging out at 18,632 right now. We are seeing insane volatility on it. Look at this from just a little while ago. Just moments ago. This thing is taking $1,000 swings like it's going out of style. It was down at 17,000 and change just a little while ago. The crypto markets are very likely to help contribute to the crashing of the stock markets, and that will lead to financial runs. People leaving their banks, is the banks collapsing, and shorts being squeezed, not by the DTC, but by all market participants worldwide. People think that we're going to be so fucking rich. It's something that I say because I'm cocky or because it's a tagline or what. No, that's just what I would tell people when they were too fucking lazy to read the Reddit DD that I've been doing for years now, specifically related to these bank derivatives in the quadrillions of dollars, not billions with an S, not trillions with an S, but quadrillions with a fucking Q. And the fact of the matter is, if you're too lazy to do your homework and your due diligence, at the end of the day, what is the TLDR? The TLDR is that we're going to be so motherfucking rich because the market's going to crash. I'm going to make money on the way down, and then shorts are going to get squeezed, and I'm going to make money on the way up during the mother of all short squeezes. It happened January 28th of 2021. It happened again in June of 2021, and it will likely happen again when the black swan lands on Wall Street. Because you think you've seen it so far, you think it's been a crazy year? You ain't seen nothing yet, ladies and gentlemen. You ain't seen a goddamn thing. That's the moment you realize you've been shorting too much. And how many other meme stocks ran? Hundreds of meme stocks ran right along with and right after AMC and GameStop because they're all held in ETF baskets. This is a bit of an old graphic from last year. Big shout out to Kenna from the Bull House. Make sure you follow her. But these are ETFs holding AMC. These are ETFs holding GameStop. And these are ETFs that hold them both. And amongst those ETFs, there are hundreds and hundreds of other meme stocks. And Jerome Powell and the Fed are going to have to...
They're supposed to be able to show the swaps.
Exactly. That's just exchange traded funds. It doesn't show the swaps, the futures, the married puts, the divorce puts. It doesn't show the rehypothecations and the shorts marked as long. It doesn't show a lot because we don't get a lot of data as retail investors. But with the data we have, we need to put to good use. And when they're straight up coming out and testifying in front of Congress that there are issues relating to hedge funds and the possibility of over-leveraged hedge funds there causing financial runs, it's fucking clear as day. It's just, here we go, telling us everything we already know. Here, we're starting.
During the presentation, all participants will be in a listen-only mode, and afterwards we'll conduct a question-and-answer session. At that time, if you have a question, please press the 1 followed by the 4 on your telephone. If at any time during the conference you need to reach an operator, please press *0. Today's call is being recorded Tuesday, November 8th, 2022. And now I'd like to turn the conference over to John Merriweather. Please go ahead.
Thank you, Scott. Good afternoon, everyone. I'd like to welcome everyone to AMC's third quarter 2022 earnings webcast. With me this afternoon is Adam Aron, our Chairman and CEO, and Sean Goodman, our Chief Financial Officer. So before I turn the call and the webcast over to Adam, let me remind everyone that some of the comments made by management during this webcast may contain forward-looking statements that are based on management's current expectations. Numerous risks, uncertainties, and other factors may cause actual results to differ materially from those that might be expressed today. Many of these risks and uncertainties are discussed in our most recent public filings, including our most recently filed 10-K and 10-Q. Several of the factors that will determine the company's future results are beyond the ability of the company to control or predict. In light of the uncertainties inherent in any forward-looking statements, listeners are cautioned to not place undue reliance on these statements. The company undertakes no obligation to revise or update any forward-looking statements, whether as a result of new information or future events. On this webcast, we may reference non-GAAP financial measures such as adjusted EBITDA, constant currency, operating cash burn, among others. For a full reconciliation of our non-GAAP measures to GAAP results, please see our earnings release posted in the Investor Relations section of our website earlier today. After our prepared remarks, there will be a question-and-answer session. This afternoon's webcast is being recorded, and a replay will be available in the Investor Relations section of our website at amctheaters.com later today. With that, I'll turn the call over to Adam.
Thank you, John. Good afternoon, everyone, and thank you for joining us today. Even with the third quarter financially being flattish, we join you on this call today brimming with confidence that the recovery of AMC Entertainment is well underway.
Oh, yes.
AMC welcomed more than 53 million guests to our theaters around the world in Q3 of 2022, a 33% increase compared to the third quarter of 2021. On our last quarterly webcast, we were encouraged that the July industry-wide domestic box office was down only 12% from the pre-pandemic July of 2019, but we also did predict quite correctly that there would be a dearth of big movie titles being released in August and September of this year. Even so, we also were ebullient about the movies coming out in the fourth quarter of 2022 and in calendar year 2023, and that is precisely our view again today.
Yes.
Despite a lackluster August and September, we're seeing that the industry-wide box office is already on a rebound, both domestically and globally, clawing and climbing its way back. In looking at the fourth quarter of 2022, it's worth noting that Warner Brothers' Black Adam, released in mid-October, had the highest domestic box office opening weekend gross of all time for any movie featuring Dwayne Johnson as a leading man. I also can confirm today that our advanced bookings at AMC and Odeon for Black Panther: Wakanda Forever are frothy and robust. We are about as certain as we can be that the so-called Black Panther 2 will be one of the biggest movies of the year, and that its ticket sales might even cause it to rise as high as the second biggest movie of 2022, behind only Top Gun Maverick. And of course, Q4 will continue with Disney's Strange World, with James Cameron's Avatar: The Way of Water, and with Damien Chazelle's Babylon. Anchored by a strengthening fourth quarter of 2022, let's get a better sense of this recovery by briefly going back to the beginning. Recall that when the pandemic, the industry-wide domestic box office, which is the basic measurement of the size of our industry, fell by more than 4/5 for the full year of 2020, leading to the lowest box office grosses since 1981. But in comparing to 2020, the domestic box office more than doubled in 2021. Our expectation for the full year of 2022, when this year is all over, is that the domestic box office will have dramatically risen and increased yet again, by not quite, but almost by 75%. And while no one's crystal ball is perfect this far in advance, based on our analysis of the movie titles currently expected to be released in 2023, we think that next year's box office should grow yet again by between 15 and 25%, and possibly by even more. Our confidence in looking ahead stems not only from a growing industry box office, but also because of the demonstrated agility of the AMC board and management team to skillfully navigate our way through crisis. Since the beginning of the pandemic, we have taken bold and decisive steps to ensure a recovery for AMC Entertainment by taking action after action after action to enhance our marketing appeal and our operating profitability, while at the same time brilliantly raising capital. Over the last 2.5 years, AMC took in some $2.2 billion of new equity proceeds and another $2.6 billion of debt financings. In addition, we were able to amicably negotiate almost $1.5 billion of further benefit from asset sales, government support, and concessions from both our lenders and our theater landlords. Accordingly, at the end of the third quarter, AMC had just under $900 million of liquidity. Having ample liquidity is a bedrock of strength. We will use ours both to continue to grow, but also to continue to delever. Our smart financing activities include the recently announced refinancing just a few weeks ago of our $400 million Odeon term loan in Europe, taking the debt paid off to $144 million so far this year in total. And there is also the introduction of our preferred equity units, or APEs, in August. In launching them, we said that the creation of APEs was nothing less than an all-defining moment in AMC's future, as it gave us a new currency to help AMC to grow, to delever, and to raise capital. We also said at the time to those who feared mindless dilution that we would treat our new APE preferred stock, that we would treat it as precious, and we will continue to do so. So far, we have raised only $37 million of equity proceeds from the sale of APEs into the market. We have indeed been careful. As to APEs specifically, each AMC preferred equity unit was designed to have essentially similar economic and voting rights as an AMC common share. But markets are markets. They act on their own accord, and they are out of our direct day-to-day control. Even so, we continue to be convinced that over time, the availability of APEs will serve their purpose for AMC Entertainment well, to help AMC to grow, to delever, and to raise capital. Taken together, all of the actions that we've taken have allowed AMC Entertainment to successfully navigate our way through the impact of the COVID pandemic. And by contrast, we did so while several of our competitors, both big and small, were forced into bankruptcy protection or some other form of reorganization or liquidation. In 2021 and 2022, we wisely pruned our circuit by adding theaters where it made sense to do so and by aggressively shedding about 7% of our theaters. Indeed, AMC and Odeon permanently closed old or tired buildings with marginal or negative profitability that had reached the end of their productive life cycles. At the same time, though, we also have been able to grow our network by profitably adding attractive theaters, either built from scratch in appealing locations or those picked up from our competitors who may have stumbled. I should point out that with $900 million of quarter-ending liquidity, our eyes are keenly open to new such opportunity as it may arise, tempered only by my previous comment that preserving ample liquidity and delevering are also high priorities for us. We also have a number of bold ideas about how we can broaden our business, which I will talk about specifically later on this call. So that's where we are 2.5 years into our COVID-19 journey. We're not out of the woods yet. While the box office is unmistakably on the rise, it's still falling short of pre-pandemic levels. Adding to all that, inflation is rampant and interest rates are marching upwards. In summary, though, as I said at the beginning of this webcast, we are brimming with confidence. We know what we're doing, and we will manage AMC with all of our skill and determination as we strive to rise to the challenge. With that, I'm going to pass the call to Sean Goodman, our CFO. After that, I'll come back to talk about some key developments and answer your questions.
AMC bought more theaters and still has
$895
million in liquidity.
Thank you to everyone for joining us this afternoon. While the third quarter started off strong, August and September were, as we expected, relatively quiet. Nonetheless, the quarter still saw revenue growth of 27%, and that number is 32% in constant currency when compared to the third quarter of 2021. Comparing Q3 2022 to the prior year's third quarter, the growth in revenue was offset by box office concentration with a resulting increase in film exhibition costs, a reduction in government assistance, and inflationary cost pressures. The result for the quarter was a small consolidated adjusted EBITDA loss of $12.9 million compared to a $5.3 million loss a year ago. Note that our domestic adjusted EBITDA in Q3 of $1.2 million was an improvement of $31.3 million compared to the prior year, while the international business, which enjoyed meaningful government assistance in 2021, experienced an adjusted EBITDA loss of $14.1 million compared to adjusted EBITDA of $24.7 million a year ago. Now let's just step back and look at our recovery over the last 9 months. Year-to-date, consolidated adjusted EBITDA is a positive $32 million, while the compared to an adjusted EBITDA loss of $450 million for the same period a year ago. That's approaching $500 million of adjusted EBITDA improvement so far this year. As has consistently been the case in this recovery period, our per-guest performance metrics remain markedly better than pre-pandemic 2019. For Q3 2022, on a consolidated basis, total revenue per patron was $18.21, approximately 21% higher than Q3 of 2019. This was driven by admissions revenue per patron growth of 12%, food and beverage revenue per patron growth of 30%, and other revenue growth per patron of 48%, all compared to the third quarter of 2019. Taking a closer look in the domestic business, admissions revenue per patron increased by 15% compared to Q3 2019 to $10.90, and our international business achieved a 2% increase to $8.60. Normalizing for the strength of the US dollar compared to 2019, international admissions revenue per patron increased by 10% in constant currency. From a food and beverage perspective, we continue to enjoy exceptionally strong food and beverage revenue per patron. In our domestic markets, food and beverage spend per patron in the third quarter was $7.11. That's 33% higher than average spend in pre-pandemic Q3 2019. And in the international business, food and beverage spend per patron was $4.10. That's nearly 15% higher than Q3 of 2019 and nearly 24% higher on a constant currency basis. Finally, domestic other revenue per patron increased by 54%, and international other revenue per patron increased by 37% and 48% in constant currency. Going forward, we are focused on continuing to drive strength in these key performance metrics through one, ongoing development of our industry-leading AMC app, website, and loyalty programs. Two, enhancing the guest experience, including our innovative food and beverage offerings. Three, providing the very best possible sight and sound experiences through premium offerings such as IMAX, Dolby Cinema, and AMC Prime. And four, growing revenue through diversification initiatives, such as renting out our theaters during off-peak times, marketing and promotion initiatives. All of the above to be achieved while paying very close attention to our operating efficiency. Note that premium format attendance represented 14.9% of domestic attendance in Q3 2022, compared to 12.6% in the third quarter of 2019. And in our international markets, premium format attendance represented 9% compared to 8.4% in the third quarter of 2019. Let's talk about the balance sheet now. We ended the quarter with liquidity of $896 million. This is comprised of $685 million of cash and cash equivalents and $211 million of undrawn credit facilities. As anticipated and discussed during last quarter's earnings webcast, cash burn this quarter was adversely impacted by the relatively quiet box office in August and September, together with seasonal working capital requirements. Our working capital will naturally come under pressure when a relatively strong quarter is followed by a weaker quarter, and Q3 was no exception. Operating cash burn for the quarter, representing cash burn before debt servicing costs and before deferred rent payback, was approximately $179.2 million. Looking ahead, we expect our cash burn to improve in Q4 with a return to positive operating cash generation. Regarding capital allocation, our priorities remain unchanged. One, maintaining sufficient liquidity to manage through the recovery phase of our business. Two, strengthening our balance sheet by extending maturities, reducing debt, and reducing associated interest costs. Three, investing in our business to enhance the guest experience. And four, opportunistically pursuing value-enhancing initiatives, including those that lead to diversification of our business. During the third quarter of 2022, we strengthened our balance sheet by repaying approximately $23 million of deferred rent, reducing our deferred rent balance to approximately $196 million. Recall that back in March 2021, this balance was more than $470 million, and over the last 18 months, we've lowered our deferred rent liability by nearly $275 million. In 2022 alone, deferred rent has been reduced by approximately $119 million. We expect to further reduce this deferred rent balance during Q4 by another approximately $50 million. In addition to the reduction in deferred rent, as Adam noted, we have taken further actions during the year to extend debt maturities and reduce our debt balance. The net result is an approximately $144 million reduction in the principal amount of interest-bearing debt maturities through to 2026. All told, if we include the decrease in deferred rent, we've actually reduced our debt liabilities by a total of approximately $263 million so far this year.
$250 million reduction in
net
debt.
of landlord contributions was $44 million in the quarter. And for 2022, we continue to expect CapEx to be in the range of $150 to $200 million. Actively managing our theater portfolio continues to be a priority. During the third quarter, we added 4 new theaters and closed 8. This brings the total number of locations closed since the pandemic began to 106, and the total new locations open to 49, for a net reduction of 57 locations. The combined 49 new locations continue to substantially outperform 106 closed locations and also outperform our underwriting expectations. We continuously seek opportunities to strengthen the balance sheet while simultaneously weighing the liquidity needs of our ongoing recovery. And as the steps that we have taken to date show, we are ready to take action as attractive opportunities arise. And with that, I'll hand the call back over to Adam to review some exciting recent announcements and provide an update on our strategic initiatives.
Thank you, Sean. Before we head to your questions, I'd like to debunk a few myths, but also to address what I think is the single most important topic
Listen up.
facing the movie theater industry of today, as well as several operational, environmental, and business development concepts directly on the horizon as we continue to innovate at AMC. Since the pandemic first arrived, the press has been filled with 3 concerns that conventional wisdom has repeatedly insisted would be existential threats to moviegoing in theaters: fear of infection of the coronavirus disease, the rise of streaming services, and the collapsing of exclusive theatrical windows. On the disease risk, thanks to vaccines, medicines to deal with COVID like Paxlovid, and the fact that so many people have antibody protection because they already experienced a COVID infection, dealing with COVID now has transitioned from pandemic to endemic. It's now more like the seasonal flu, which has been with us for more than a century since it was a killer pandemic in the early 1900s. People will still come down with COVID-19, but it's no longer the commerce-destroying thing that it was back in 2020 and 2021. Life is returning to normal. Risk 1 dealt with. On the streaming services risk, we have long said that the consumer's voracious appetite for content is big enough for movie theaters and streaming services to coexist harmoniously together. The results from Spider-Man No Way Home last winter, from Top Gun Maverick this past summer, and from the expected big grosses this weekend from Black Panther: Wakanda Forever, will again remind us all that movie theaters can thrive even with the consumer having a multitude of streaming services that are choices as well. As opposed to streaming services being a threat, we think they're a potential ally for AMC Entertainment. This month, for example, we're showing our first ever Netflix movie at AMC, the sequel to Knives Out. We recently announced that we will be showing Paramount Plus's smash hit Yellowstone in our theaters. Last December, we played Amazon's Being the Ricardos, which starred our very own heroine, Nicole Kidman. And of course, Amazon also now owns MGM, whose movies appear prominently on our AMC big screens. Theaters and streamers can thrive simultaneously and can thrive together. Risk 2 dealt with. And as for the risk of collapsing windows, during the height of the pandemic, several studios experimented with going to simultaneous home and theatrical release, or found themselves forced to sell off movie titles that originally were bound for theaters, but which went elsewhere instead. Fortunately for us, studios appear to realize how much boundless money they can make by taking their films to movie theaters first. While there may be an occasional exception here or there, our industry has coalesced around an exclusive 45-day window for theatrical release. Hopefully, that will turn out to be acceptable for studios and acceptable for theaters to both do well. Risk 3 dealt with. At this point, there is only one topic that should be on the top of all minds and the tip of all tongues. It's not the coronavirus, it's not streaming, it's not Windows. It is this. Movie theater operators need more movies. Because of pandemic-induced production delays, the number of big movie titles being released by the major studios is still down considerably, down 20 to 30% versus pre-pandemic norms. We eagerly await more film product to show, but I also can report to you today that we are seeing considerable progress on this front. Every few months, I have the opportunity to meet in person with the leaders of all the major studios in Hollywood. Over and over again, I am hearing from them that they are doing all in their power to pick up the pace of the number of movies that they will be releasing theatrically going forward. That's the major challenge facing the movie industry right now, above all else. And there can be optimism that more movie titles, rather than fewer movie titles, are in our future. Let's turn back to AMC initiatives. There are 7 that I'd like to address directly and update you on. 1, given the financial struggles of many other companies within our industry, our eyes are wide open to opportunity that may arise for AMC. There is nothing further to report to you today on this subject, but know for sure that we are paying close attention. 2, at our existing theaters, we're doing an enormous amount of business on our premium large format screens. So we're doing all that we can to renovate existing screens and increase the number of IMAX, Dolby Cinema, Prime, and iSense screens at our AMC and Odeon theaters. 3, we have started the multi-year installation of laser projectors broadly across thousands of auditoriums in the AMC system. They dramatically brighten and sharpen the images on our screens, thereby greatly improving the movie-going experience for our guests. Laser projection is also the biggest single green initiative that AMC has ever launched, as they decrease energy consumption and they eliminate the need to dispose of depleted halogen bulbs in landfills. 4, just yesterday, we announced a truly exciting partnership with Zoom, in our view, the world's leading video communications platform, to enter into the multi-billion-dollar meetings market for corporate and other meetings. With this new partnership, we are able to offer meeting organizers the best of both worlds, the spectacular communications technology of Zoom, combined with the comfort, size, scale, and state-of-the-art sight and sound capabilities of AMC's centrally located theaters. These new Zoom rooms at AMC are an all-new product that will be available in as many as 17 major cities across the United States starting sometime in 2023. Using a Zoom room at AMC, meeting and event organizers will be able to bring together decentralized workforces or customer bases in significant numbers of people from different markets, but together at the same time for a cohesive, both virtual and in-person meeting experience. It is not a well-known fact, but already, right now, AMC does about $20 million a year of meetings business, and that's limited to one movie theater at a time without the cross opportunity to link up through Zoom technology theaters in multiple markets simultaneously we're optimistic about the growth in revenues that we can generate from the very substantial meetings market. Additionally, we're in the final throes of development of an AMC branded credit card. So item 5 on my list of 7, I am pleased to tell you today that we firmly expect that our new AMC branded credit card will be launched in the first quarter of 2023, if not sooner.
Sign me up.
We could not be more excited about the progress we've made in getting to this point. Full details to come when we launch. 6, much also has been written about AMC's coming entry into the multi-billion-dollar popcorn market. Our food and beverage and marketing teams have made great strides in product development, in packaging, and in our distribution plans. I fully expect that in partnership with a major national retailer, AMC Perfectly Popcorn will be on the shelves at grocery stores around the United States in the first half of 2023. Our AMC brand has credible resonance amongst consumers of popcorn, and we can't wait to see the smiles on your faces as you get to see AMC popcorn in a store near you. And lastly, update number 7. Let's briefly tell you about developments recently at Hycroft Mining. Just last week, Hycroft reported the second round of results from its drilling exploration program, the biggest such exploration program on the Hycroft mining site in northern Nevada in nearly a decade. As was the case when the first round of exploration results were announced, Hycroft uncovered more gold and more silver in them thar hills. And of vital importance, Hycroft has been finding ore deposits that are of significantly higher grade. We made the Hycroft investment recognizing the vast potential of the Hycroft asset if the company were appropriately capitalized. The results to date are extremely encouraging. I have to admit to being amused how receptive our shareholders were to our investment in Hycroft, and by contrast, how astounded Wall Street professionals were to that same announcement. Accordingly, while there's no certainty in life, nothing would give me more pleasure someday well down the road than to report to you the degree to which we can monetize our Hycroft investment, hopefully in eye-popping numbers. In closing, we at EMC very much appreciate the support that we continue to get from our passionate shareholder base. And let me say personally that it's been a particular honor for me to meet with many of our shareholders one-on-one at the movie screenings I've personally been hosting around the country, and as of next week across the globe, as my 11th such screening will be for the movie of the hour, the much anticipated Black Panther: Wakanda Forever, at the Odeon Lux Holloway Cinema in London this coming Monday night, November 14. Sean, let's now move to questions both from our shareholders and from industry analysts.
Here comes the good stuff.
Let's start with questions from our shareholders.
This has been a great
thank you to them for submitting their questions. I've grouped the questions into 3 categories. So the first category, Adam, is innovations. And the first question there is, where do you see AMC expanding in the future? And what categories of innovations are in the pipeline to enhance the business?
So these items were sort of addressed in my earlier prepared remarks. Number 1, within our existing theaters, the amount of business that we do in our premium large format screens is significant. Sometimes on our opening weekends, even though our premium format screens represent only 10% of our auditoriums, sometimes they're producing as much as 50% of the gross of our films across the network. So it makes sense for us to increase the number of premium format, large format screens in our system. And that we are doing. We're going to introduce more IMAX screens, more Dolby Cinema screens, more iSense screens, and more Prime screens. So that's happening. Second, in terms of innovation, again, I mentioned it in my prepared remarks, but I can't say enough how big it is that we're deploying about $250 million of resource to introduce laser projection in about half of our auditoriums. This is a technical term, but the so-called light levels inside a movie theater with laser projection as contrasted with a halogen bulb, it goes up by between 50 and 100%. It means the pictures on the screen are sharper, they're brighter, and therefore the movie watching experience is that much better. We're always going to want to create an environment in our theaters that makes a consumer want to get off their couch at home and come out to a theater. And brighter, sharper pictures, especially doing so in an environmentally friendly way, is a good way to do that. And then the third major item of innovation for AMC is what we've been doing away from our theaters. Things like the branded credit card, things like Perfectly Popcorn, things like Zoom Rooms, which is in our theaters but away from movie watching per se. These are all areas where we think AMC will shine going forward. And it's not exactly innovation, but you talked in your remarks about how we closed 100 plus marginal theaters and opened 50 new ones, and the 50 new ones make a lot more money than the 100 that we closed. I do continue to think that as the rest of the industry stumbles financially, we're going to see increased opportunity to grow our network and take advantage of our various strengths.
Next question here, Adam, is a request for an update on AMC On Demand.
AMC On Demand, which we introduced several years ago before the pandemic, has always had kind of low usage. And candidly, while it's a good little product, I think our money is better directed elsewhere. And so the money that we have been investing to grow AMC Theaters On Demand is money I think that instead we ought to be putting in the placing a significant number of branded credit cards or taking popcorn to the home popcorn market. So I think that as we look to 2023, we're going to look to either phase out AMC Theaters On Demand or alternatively joint venture with another party to offer that same capability to our guests, but not necessarily to investment spend to build it up ourselves. So I mean, it takes me to the point that at a time when dollars are precious, because the recovery of the movie industry has taken a considerable time. You and I agree, Sean, that we need to be laser focused on making sure that every dollar counts. Cut every dollar of expenditure, increase every possible dollar of revenue, back the best ideas, walk away from the ideas that may be intriguing, but may be of lower grade priority.
Two questions here. Thanks, Adam. Two questions here that you did mention in your prepared remarks, but people are asking when can they expect to see AMC branded popcorn on the shelves, and what is the long-term potential of the partnership with Zoom? So maybe you want to add a little bit more color.
Sure. Sean and I have been at many a taste testing of one recipe after another for our ready-to-eat popcorn and our microwavable popcorn that's going to hit shelves in the first half of 2023. We've seen the packaging, which I think is beautiful. We've had numerous conversations with major national retailers and are getting really favorable response. People want to carry this product on their shelves. You're going to see it in the first half of 2023. I was supposed to caveat everything because you never know what can go wrong, but my firm expectations is on the shelves first half of the year. As for Zoom, I was in the hotel industry for a good chunk of my career. The meetings market is a multi-billion-dollar market. And for any of you who've gone to a hotel for a meeting and sat in their ballrooms or in their breakout rooms, their chairs are not comfortable. When you compare the comfort of an AMC signature recliner seat to what you might get at a hotel, we beat them. Traditionally, we've only been offered to offer meetings at a theater as a standalone entity. Now, thanks to our partnership with Zoom, we're going to be able to link up theaters in city after city so that people who want to have a nationwide meeting, instead of having to get everyone to fly on a plane and go to a convention city, can do so simultaneously at our theaters. And I saw some reaction to the press announcement yesterday at Zoom. Why would people go to a theater? Why don't they just sign in on Zoom? Because like Zoom's an amazing thing. As you know, we run our whole company on Zoom for like 2.5 years now. But the answer is when you've got 50 or 100 people in a city, and you've got those 50 or 100 people in a dozen different cities, it's not the same thing to have 500 or 1,000 little mini pictures on a Zoom screen where everybody is alone, either at their desks in the office or maybe at home or somewhere else, signing into Zoom one by one by one by one. This gives us the best of both worlds because people can still gather in a medium-sized group in a city and be hooked up through really sophisticated Zoom technology in another city, or in another city, in another city, in another city, because we could hook up multiple cities with no problem. And I got to tell you, this idea was the idea of the CEO of Zoom, who literally called us up and wanted to share with us his idea how Zoom could make AMC theaters a compelling entry into the meetings market. And the second we heard the idea, we were all for it, and we think the financial opportunity is big. Remember, we already do $20 million a year in meetings business, and that's without the ability to link city after city at the same time. So don't want to give a specific goal, but hopefully the revenue opportunity is large.
Thanks, Adam. So a question about our operations, especially looking into 2023 in the current environment. The question is, we're all seeing the impact of inflation on our daily lives. How's this impacting AMC?
So for those of you who are under the age of 35 on this call, you probably don't even remember what inflation is. But for those of us who are old enough to remember Jimmy Carter when he was president of the United States, we lived through inflationary periods, and they stress the system because costs rise. And if you want to know how much they raise costs, just look at what the national inflation rate is. That tends to be the cost that everything goes up in the country. What's particular, so in terms of a starting point, when you hear inflation statistics being reported nationally, you should assume that AMC's costs are going to go up by a similar amount. Having said that, what is very unusual in AMC's case is that because the box office is on a path of recovery, the volumes that we're seeing in our theaters, the volumes of customers that we're serving, is rising dramatically. And as a result, we pick up operating efficiencies and increased operating productivity because the number of guests coming into our theaters is coming down, essentially because we're spreading our fixed costs over more people. So we're in the enviable circumstance that we've got a mitigating offset to inflation. The increasing productivity that comes from being able to spread our fixed costs over a larger customer base is offsetting a big chunk of the inflationary costs that would otherwise not be mitigated without this increasing volume of customers for productivity gains.
And in the next section here is a couple of questions about the stock. And the first one here is, please explain why you believe the stock has gone down and why management has been generally...
So this is the biggest question of the day, isn't it? Let me start by saying I am a major AMC shareholder. It is an enormous part of my net worth, and I venture to guess that I personally own more shares than anyone listening on this call today. So I assure you that just as you watch the share price, I watch the share price. Having said that, in terms of decline, there are a lot of factors. These aren't the only reasons why the share price has fallen. But look around at what's happened in the United States, and for that matter, the planet, over the past several months. There's a war going on in Ukraine, which is not good for global stability. It's caused a surge in energy prices. It's caused dramatic inflation, which in turn has caused the Fed to commit to raising interest rates. These are all factors that have affected the market overall. In the case of the movie theater industry, in early September, Cineworld also declared for Chapter 11 bankruptcy protection, which also created a certain amount of agita around the movie theater industry and our share price. It also does depend on what your time frame is, of course, because while the share price is lower than it was in, let's say, June of 2021, it's still a lot more than it was in January of 2021. But what I just said is about all you'll ever hear me say about our share price. Because you ask, so like, why is management silent on this subject? There are things called securities laws in the United States. And if you're the CEO of a public company, it is much better for you to be talking about the state of the business than the state of the share price. And I know this is frustrating to some of you who would like me to comment all the time, but prudence says that our focus and our public focus should be what we're doing to bring back the health of the business over the short, medium, and long term. And that's what we should be talking about. And so that, in fact, is what we have been talking about. We said earlier in the year that you should never interpret silence as inaction or indifference. We are aware this subject is very important to you and to all of us as significant shareholders of the company. Having said that, our focus and our public commentary is usually constrained to what's in the best interest of the business, what's the future of the business, what are the risks inherent in the business, and that's what drives our public commentary.
Thanks, Adam. And there's a follow-up here which is asking, can we reverse split the APE shares?
It's something that's legal to do, but interestingly, an action like that would require a shareholder vote.
Which means vote yes.
Should remind us all.
To the fucking idiots that don't
Since
know,
there are
vote
many
yes
shareholders on
when
this
it comes
call.
up.
This is your company. Day to day, we run it. We do our best on your behalf. But on major topics of governance, shareholder vote is required. And that would be one, for example, that we would have to take out to the shareholders for their opinion and their consideration, and ultimately their decision.
Great. And then a question on disclosure here. Someone is asking, will you provide information on the number of shareholders and the number of shares that have been directly registered with the transfer agent, Computershare?
So for those of you who don't know what direct registration of shares is, our transfer agent is Computershare, and most of you hold stock through brokerages. Some of you own stock that's directly registered with the company through our transfer agent. A primary benefit, I suppose, for you when you register your shares directly with the transfer agent is that transfer agents do not allow for shorting of shares, whereas most brokerage firms do. And so what we've heard from some of you is that to make sure that your shares cannot be shorted, you want to register them directly with the company and a transfer agent, which is your right as an owner of a public security. We haven't given any guidance to any of you to do that or not do that. It's entirely your call. I should point out it's a small number of people who have done it. As best I can tell, it's around 15,000 or so of our millions of shareholders who decided to directly register shares, and I think they've registered in the neighborhood of 10 million shares or apes with our registrar.
I mean, I got like
and what we
5X shares. I might DRX a couple thousand.
Number that is one of these numbers that we should publicly release. So when we file our 10Q for the third quarter, we're going to announce in the Q what the number of directly registered shares is.
Excellent. And then the last question that I have here, and then we can go on to questions from analysts, is do you have any comments regarding the acquisition of Twitter by Elon Musk?
That's quite a question. The funniest comment that I heard on Twitter in the past 2 years was, the two great meme stocks are AMC and GameStop. And then there's Musk, and the guy who runs AMC is Adam Aron, that begins with an A, and Ryan Cohen, that begins with a C, runs GameStop, and of course there's Elon Musk. And somebody strung together that AMC was Aaron, Musk, and Cohen. Quite something to behold. Musk is just taking control of Twitter. And I have no comment, really, one way or another, whether he will do a fabulous job owning and running Twitter or not. But what I can tell you is that the asset that he bought, meaning Twitter, this is the most incredible communications tool that I've ever seen. And if you just look back over the last, what is it now, a year and a half, that I've actively been tweeting with our shareholder base, we've been able to convey hundreds and hundreds of important messages to you all about what's going on in our company. And I've been able to read literally hundreds of thousands of inbound comments back to us I spend about an hour a day on Twitter, mostly reading what you have to say. And I learn so much about what's on your mind. And of course, Twitter also gives us the opportunity not only to learn by listening from you, but also to share information with you and share news with you. And so I continue to be astounded by how impactful and powerful Twitter is as a communications vehicle. And I hope that Elon Musk does good things with Twitter, because it's a very valuable national asset if it's run well. With that, I guess, Scott, the operator, can you see if there are any questions from our industry analysts who are on the call?
Absolutely. Thank you. If you'd like to register a question, please press the 1 followed by the 4 on your telephone. You will hear a 3-tone prompt to acknowledge your request. If your question has been answered and you would like to withdraw your registration, please press the 1 followed by the 3. If you are using a speakerphone, please lift your handset before entering your request. Once again, that's 1-4 to register for a question. One brief moment for the first question. And we have a question from the line of Jim Goss with Barrington Research. Please go ahead. Your line's open.
Good afternoon, Adam.
Hello, Jim.
How are you doing?
We're all good today. How are you doing?
Good. I thought I'd ask you about the Stubbs A-list. It's been sort of not relevant for the past couple of years as the content and everything has been under pressure, but I wonder if you might talk about whether you have a plan to revive it, make it more relevant as the amount and mix of content improves, and where it might stand right now. What is your starting point?
Sure. The A-List was, for those of you who aren't totally familiar, A-List is our subscription program, up to 3 movies a week for a fixed price of between $20 and $25 a month, basically. When we launched the program in June of 18, it instantly took off. And it popped up to as much as 15% of our total moviegoing in the United States. And we have a similar program, by the way, in London called Limitless and in Germany at our Odeon theaters in the UK and our UCI theaters in Germany. In Europe, the Limitless program has grown considerably. And back in the height of the pandemic, when our theaters were all closed, obviously there was nobody paying us $25 a month to go see 3 movies a week because all our theaters were shut. So we put AMC A-List on pause in the United States and cranked it up last year. The good news is we're already back to between 600,000 and 700,000 A-listers, up from 0 during the pause. And again, we're seeing, depending on the title, 10 to 15% of our total moviegoing is coming from A-list members. So the A-list numbers have continued to rise from the second that we unpaused the program. If you look at A-listers as a percentage of our total moviegoers, it's kind of on par with where it was prior to the shutdown. And we intend to be very aggressive going forward to continue to attract people to the program.
Okay, the one other thing I might ask.
Yeah, sure, go ahead, Jim.
Sure. Now, I was thinking with alternative content, you've had an opportunity to try a number of things for the same reason the theaters have been under pressure. I'm wondering if there are any things you've shown on your screens that you think have some promise to be more than just better than nothing else.
Yes is the answer to your question. So we had good success with the concerts that we showed, whether they were live or taped. We had good success with WWE and UFC events. And we've experimented with some professional sporting events. For all those things, concerts, the various sporting events, we need to secure what are called rights, broadcast rights from the leagues or the owner of the IP. And in all cases, we were encouraged by the results. And so we will be on a path to try to negotiate rights with the various IP holders so that we can grow out our alternative content going forward.
All right, thanks a lot.
Thank you, Jim. Operator, am I correct, Scott, that we're done with questions for the day?
Correct, there are no further questions at this time.
Great. So to all of you who joined us today, thank you. I think I'd like to close the call with two thoughts. I said in my opening remarks that we're brimming with confidence as we look at the recovery path that AMC is on. That's the first comment. The second comment is to keep us continuing to be encouraged and brimming with confidence. Black Panther, Wakanda forever. Black Panther, Wakanda forever. Black Panther, Wakanda forever. It's going to be a big weekend in the movie theater business, and we're excited to be talking to you today just ahead of this new very big movie being released theatrically. Thank you for joining us. We'll look forward to talking to you again next quarter.
That was phenomenal. A lot of people are giving me some mixed signals here in the YouTube chat. It seems like a lot of people don't really understand what happened. AMC's earnings call was actually quite good. There was a couple of negative things, but people failed to realize that AMC did buy theaters. So naturally, that would cause a bit of a net loss. They bought a lot of theaters from companies that went bankrupt. Their total revenues grew to $968 million compared to $763 million for the third quarter of last year. That's over $200 million increase in revenue. Their net loss increased to $226 million compared to $224 million, $2 million increase compared to the third quarter of 2021. But they weren't buying theaters in 2021 like they are now. In addition, their EBITDA decreased by $7.5 million to a loss of $12.9 compared to a loss of $5.4 for the third quarter of 2021 because there are much fewer movies currently, as Adam Aaron told us. But net cash used in operating activities was $223.6 million. Their cash burn was negative $179 million. That was negative $223 million as well for the net cash used. And they have $895.8 million in cash on hand, including $211 million of undrawn capacity under the company's revolving credit facility. In addition, some people fail to realize that paying off $250 million of debt is fucking phenomenal. Absolutely phenomenal. AMC may have about five or so billion dollars worth of debt, but there are many other companies that have over $100 billion of debt. So that's not really a big fucking deal. Companies operate with debt all the time. It is very fucking healthy for a company to have debt, especially when they are increasing their earnings per share, quarter over quarter, year over year, coming out of a pandemic. In addition, he said, exactly as anticipated and foreshadowed on our last earnings call, third quarter results were impacted by particularly soft industry-wide box office in the latter two-thirds of the 2022 third quarter, meaning that there was not a lot of movies, period. But even still, food and beverage spending grew by 12% and 30% respectively compared to the third quarter of 2019, before the pandemic even started. So more people are spending more money and buying more food and beverage at AMC. They continue with enthusiasm to return to a more robust film slate in fourth quarter. That means there's going to be more fucking movies. A lot of people fail to realize these things are very, very positive. Again, as well, Coming up soon is something that a lot of people are unaware about and a lot of people fail to realize. Here, I did right. There's T plus 90-day liquidations. I made a mistake because it's not trading days. It's T90. It's just calendar days. Okay, they're 90-day liquidations when syndicates failed to deliver in the past. And in the past, Tesla squeezed to $2,000 per share 90 calendar days after their share dividend. Newegg squeezed to $77 per share 90 days after their merger. And Overstock had a crypto dividend distribution date of May 24th. And guess what? 90 calendars later, on August 20th, 2020, hit their all-time high of $122.32. FINRA Rule number 11880, Section B, the final settlement of syndicate accounts shall be effected by the syndicate manager within 90 days following the syndicate settlement date. Right there, it tells you clearly that it doesn't say within 90 trading days. It says within 90 days. That means calendar. What this means for people is that even though APE was not technically an IPO, but as a dividend, it did IPO on the ex-dividend date, which was August 22nd, 2022, if my memory serves me correct. And therefore, the selling syndicate was created as those shares have to be moved from the issuer to the selling broker, to the broker-dealer. And they would still need to be delivered by the ex-dividend disbursement date rule of 90 calendar days from August 22nd. The 90 calendar day liquidation by lending brokers to the shorts would occur if APE hasn't been delivered by that date, around November 23rd, 2022. The shorts that need to provide the dividend in this case are the syndicate. The defaulting on the delivery of APE would result in asset liquidation and automated closing of positions. You can see it right here, directly from the NASDAQ glossary, NASDAQ.com. The selling syndicate is a group of underwriters that issues a firm's securities by buying them from the issuing firm and reselling them to a group of smaller brokerage firms, such the ones that you and I purchased or received our APE from, for eventual sale to individual investors. Therefore, a lot of people may not understand that a selling syndicate exists, but it absolutely fucking does, as proven here on FINRA Rules 11880, 4314, and NASDAQ's own glossary of the selling syndicate. During stock market crashes, heavily shorted stocks that are not owned in majority by institutions and market makers tend to squeeze violently. Like I just displayed to you about the 90-day calendar day liquidation, automatic liquidation of these positions from Tesla, Newegg, and Overstock when they had a share dividend, a merger, and a crypto dividend. In addition, 2008 stock market lows were created on September 28th, 2008. And on October 29th, Volkswagen hit its all-time highs. Ladies and gentlemen, I don't know whether the price is going to go up or down on November 18th, 19th, 20, 21, 22, 23, and I don't really fucking care. However, I know that I'm going to keep my eyes on every single date, and I'm not going to be disappointed, and I'm not going to be a crybaby bitch, and I'm not going to be a little paper-handed bitch like David Portnoy, Portnoy, when things don't go my way. Because I didn't come into this looking for quick money. I came into AMC understanding that things are so over-leveraged with meme stocks. Things are so bad, and banks are so poorly leveraged on these that at any moment, it will take a complete market collapse due to things like stable coins and over-leveraged hedge funds that will trigger financial runs.
And the terrible economic toll that it's taking and the terrible health toll.
Notice, known here. Watch this.
Looking more broadly,
if you haven't
what
seen
the
this
U.S.
yet,
has to be the most significant
we'll wrap up the video
risks
now.
or threats to financial stability.
I think there are threats to financial stability that have come from the growth of activity in the shadow banking sector. We saw some of those threats emerge during the onset of the pandemic. We have, for example, open-end bond funds that guarantee daily redemption, saw massive withdrawals by individuals who wanted to flee to cash, and that can trigger fire sales of assets with systemic consequences. The Financial Stability Oversight Council that I head has taken that up as a topic that we're looking at and examining. There are issues relating to hedge funds. And the possibility of leverage there that can trigger financial runs. That's another topic.
Oh, that's a whole nother topic. We're going to need a lot more time to talk about that. This was Janet Yellen testifying in front of Congress on September 28th, 2021, during the CARES Act congressional hearings. Ladies and gentlemen, Thomas Peterffy, the CEO of IBKR, when he was asked about GameStop, AMC, and costs being moved to position close only on January 28th of 2021, said, "I was scared of a domino bankruptcy. I tell you the rules require the long brokers to go into the market and buy the shares at whatever price. So that drove the shares up to 480, and then suddenly, I guess, it didn't go further. But it could have gone further. He had to stop himself from saying what he wanted to say. He said that suddenly we pulled the buy button. But he couldn't exactly say that because it would make IBKR, along with the dozens of other brokers like Robinhood and Webull that pulled the buy button, look really, really bad. Well, I'm the CEO of Lit Exchange, a soon to be released broker dealer. We are not yet operational, and that is okay because we are taking our time in development. And all I got to say to that is we're going to be so fucking rich. God damn, I can fucking wait as long as I have to, but I have a feeling we're not going to be waiting very much longer at all. This is not financial advice. I'm not a financial advisor. Please do your own due diligence. That being said, I could post this in for everybody if you want to take a look at it, and you can find it on Reddit. It is known as the AMC, GameStop, and Precious Metals, Everything You Need to Know, Complete Bull Thesis. There's a lot more to it, but this is as condensed as I could do it. It's about 50,000 characters, about 20 pages long, and it is pretty intensive. I could have made this 1,000 pages long. I honestly could have, but who would read it then? So we've got to be very careful in the amount in the ways that we actually share this information. On this one account, I've got about 8,000 shares of AMC, thousands more shares of APE, and then I've got multiple other accounts with other brokers, and where I've also got many, many, many thousands more shares of AMC and APE and brokers, and call contracts, especially AMC1. Now, some people may have forgotten or may have realized that things don't happen immediately. June 3rd, 2021 was the implementation of Executive Order 13959 as amended by President Biden. And what this means, it was a national emergency with respect to the threat from securities investments that finance certain companies of the People's Republic of China. On November 12th, 2020, by Executive Order 13959, the President declared a national emergency to deal with the unusual and extraordinary threat to the national security, foreign policy, and economy of the U.S. constituted by threat from securities investments that finance certain companies of the People's Republic of China. Today, President Xi Jinping stated publicly in a Daily Mail article that they are preparing for war. Taiwan will eventually be taken by China, especially as America is trying to reduce the amount of American engineers and the efficacy of the Chinese semiconductor industry. They will take the Taiwan semiconductor companies, and they have already stated clearly that they plan to do so and need to do it before these companies are able to be moved to the United States. The President of the United States found that the People's Republic of China is increasingly exploiting the U.S. capital to resource and enable the development and modernization of its military, intelligence, and other security, which continues to allow the PRC to directly threaten the U.S. homeland and United States forces overseas. The PRC increases the size of the country's military-industrial complex by compelling civilian Chinese companies to support its military and intelligence activities. Those companies, remaining ostensibly private and civilian, directly support the PRC, blah, 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 blah. So, the president found that the PRC's military-industrial complex, by directly supporting the efforts of the PRC's military, intelligence, and other security apparatus, constituted an unusual and extraordinary threat to the national security, foreign policy, and economy of the United States. On January 13th, 2021, just a couple weeks before the January 27th and 28th run-up of AMC and GameStop and COS and many other meme stocks, President signed Executive Order 13974, amending Executive Order 13959, which came to be known as Executive here you go. Executive Order 14032, expanding upon the scope of the national emergency declared in this EO 13959, as amended. Biden said, I found that additional steps are necessary to address the national emergency, and including the threat posed by the military-industrial complex of the PRC and its military intelligence and research programs, and weapons-related production under the PRC's military-civil fusion strategy. In addition, I found that the use of this Chinese surveillance technology outside the PRC and the development or use of Chinese surveillance technology to facilitate repression or other serious human rights abuse constituted unusual and extraordinary threats to the national security, foreign policy, and economy of the United States. And I, Joe Biden said, expanded the national emergency to address those threats. EO 14032 amended 13959 and revoked 13974. I know a lot of people didn't understand that back in June when we were talking about that. I know a lot of people thought that because we said that we're going to be rich by executive order meant that we were going to be fucking moassing on June 3rd of 2022, but that's absolute fucking nonsense. Nothing other than a major black swan will cause a proper market collapse. We need more dominoes, and they will continue because it's inevitable. It's unstoppable, as you guys are seeing every single day on the news, on Twitter, everywhere you look. At the gas stations where there's no diesel, at the oil fields when there's under 22 days of actual petroleum reserves in the United States, at the voting booth when none of the fucking voting booths are actually working properly because it's all manipulated. Ladies and gentlemen, you will continue to see this take a downturn, and we will eventually see these companies be completely unusable as collateral in the future. As of now, there's been a variety, in my opinion, of swaps and futures contracts and options that have been taken out to hedge against the loss of this collateral. And that's the only reason we have not seen this actually happen yet. When you combine all these things with new ISDA Phase 6 requirements and the Phase 5 requirements that came into play last year as well, wrap it all together, the fact of the matter is that hedge funds are not having the liquidity that they had for the last even for the last decade. To the point where you're seeing the reverse repo go up to $2.2, $2.3 trillion every single day as a federal government overnight bailout that was instituted, that was taken over by the Fed on September 19th of 2019, just a few months before COVID was actually before the whole COVID fiasco. Let's just put it that way, okay? And I know a lot of people may find this hard to believe, but the vast majority of issues that went on with COVID and the reason that it was taken so seriously and overblown by the United States government and central banks around the world was because it was the only way for them to actually be able to legally print the 40% of all money in existence that they've done so in the last 24 months. They could not do it without a national emergency of this sort. Believe what you will. I don't fucking care. I know the facts. And I know a lot of other people do as well. And the fact of the matter is that these national emergencies declared in these executive orders, for now, are being skirted around. But it won't last for long. Just like Phase 6 requirements and just like ISDA contracts, when ISDA contracts do expire and then need to be rolled into newer ISDA contracts, it will not be something that will be able to be done, because once those contracts expire, and they expire all at different times, because there are weekly, monthly, bi-monthly, every 3 quarterly, annual, biannual, and even 10-year, 20-year, 30-year ISDA contracts available. As they expire, the newest contracts that are created will not be grandfathered into the old regulations. Therefore, liquidity is drying up. On that note, unless anybody else has something to say, all I fucking know is we're going to be filthy fucking rich, and I can wait as long as it fucking takes. Are you fucking fatigued? Because I'm not fucking tired. I'm not fucking tired in the slightest. And I can wait as long as it takes for Ken Griffin and Jerome Powell to get the goddamn money printer out and pay me my fucking money. When that happens, you will see a collapse of banks and financial institutions. And at that moment, Jerome Powell will bail them all fucking out. Sadly, many people will lose their pensions and 401ks, but I didn't cause that. You didn't cause that. We are not the cause. We are the cure. Plotkin and these other hedge funds, these other pricks, pardon me, I was about to say some nasty shit, are the ones that invested these 401ks and pensions and thrift savings plans and ISPs and IRAs into short positions. We did no such thing. All we did was buy stocks that we love and that we hold. It's not my fault. But if buying and holding breaks the system, maybe the system was already fucking broken to begin with. I wish you peace and wealth. Ladies and gentlemen, we're going to be filthy motherfucking rich. God damn, we're going to be fucking rich. Holy shit. Jesus Christ. People think this shit's a fucking joke. It's the TLDR, man. It's the fucking TLDR. That's all it is. Jesus fucking Christ. You know what? I got a fucking song. It's a damn good one, too.
They're gonna be so rich.
Thanks, Phil. Thanks, Phil, for real. Appreciate you, brother.
So goddamn rich. We're gonna be so rich. We're gonna be so rich. We're gonna be so rich. So goddamn rich. Get that money, printer. Yelling, yeah, get that money, printer. Kenny, ha, get that money, printer. Jay, Powell, get that money, printer. Yeah. Yelling, never telling, but she always fucking selling. BS, she don't wanna see us, let her phone free us on. Powell, acting foul, time to throw in the towel. Dark money, bringing power, reverse repo, by the hours. Gun it, bands, shoot, figures, plenty, booms, plenty, strippers, 80 moons. I'm a tipper, I am the butcher, I will sticker. In increments through the late exchange, I am the butcher, bringing the pain. When it's over, please remember that name. Like a ran through dice, now walking the same. Damn, we're gonna be so rich. We're gonna be so rich. We're gonna be so rich. So goddamn rich. We're gonna be so rich. We're gonna be so rich. We're gonna be so rich. So goddamn rich. Get that money, printer. Yelling, yeah. Get that money, printer.
Oh, shit.
Kenny, ha, get that money, printer. Jay, Powell, get that money, printer. Yeah. Go get my shit, man.
Stable coins and over-leveraged hedge funds are fucked. They're going to come out with CBDCs, and they're going to be backed by this. Silver and fucking gold and other precious metals. That's their only fucking chance. And they're going to say that they saved you. They're going to say they fucking saved you and that they've got a solution. And it's going to be the central bank digital coin. They're going to be able to take your taxes right out of your fucking paycheck. Your child support, anything you owe. If you're not following their regulations, you're not going to be able to make a purchase at the fucking grocery store. Good luck, ladies and gentlemen. Make sure you're properly fucking hedged. Do your own goddamn due diligence. I'm fucking done. I'll see you later. I'll be around sometime. As you guys can see, I only stream when it's important. Otherwise, I might not stream for a fucking week or two if I don't feel like it, because this isn't my fucking job. This is my hobby, because I fucking love this, and I just want to warn people of the morons out there on mainstream media that are like Jim Cramer, that are trying to talk you into selling your positions. I'm not telling you what to do. I'm just telling you, do your own fucking homework. Peace. And wealth.
I am not throwing away my shot. I am not throwing away my shot. Hey, yo, I'm just like my country. I'm young, scrappy, and hungry, and I'm not throwing away my shot. I'ma get a scholarship to King's College. I probably shouldn't brag, but dag, I'm amazed and astonished. The problem is I got a lot of brains, but no polish. I gotta holler just to be heard with every word. I drop knowledge. I'm a diamond in the rough, a shining piece of coal, trying to reach my goal. My power of speech, unimpeachable. Only 19, but my mind is older. These New York City streets get colder. I shoulder every burden, every disadvantage I've learned to manage. I don't have a gun to brandish. I walk these streets famished. The plan is to fan this spark into a flame. But damn, it's getting dark, so let me spell out the name. I am the A-L-E-X-A-N-D-E-R. We are meant to be a colony that runs independently. Meanwhile, Britain keeps shitting on us endlessly. Essentially, they tax us relentlessly. Then King George turns around, runs a spending spree. He ain't never gonna set his descendants free. So there will be a revolution. revolution in this century. Enter me.
He says in parentheses.
Don't be shocked when your history book mentions me. I will lay down my life if it sets us free. Eventually you'll see my ascendancy, and I am not throwing away my shot. I am not throwing away my shot. Hey yo, I'm just like my country. I'm young, scrappy, and hungry, and I'm not throwing away my shot. I am not throwing away my shot. I am not throwing away my shot. Hey yo, I'm just like my country. I'm young, scrappy, and hungry, and I'm not throwing away my shot. It's time to take a shot.
I dream of life without a monarchy. The unrest in France will lead to anarchy. Anarchy, how you say? Anarchy. When I fight, I make the other side panicky with my shot.
Yo, I'm a tailor's apprentice, and I got y'all knuckleheads and local parentes. I'm joining a rebellion, cause I know it's my chance to socially advance. Instead of sewing some pants, I'm gon' take a shot.
But we'll never be truly free until those in bondage have the same rights as you and me. You and I do or die. Wait till I sally in on a stallion with the first black battalion. Have another shot.
Geniuses, lower your voices. You keep out of trouble and you double your choices. I'm with you, but the situation is fraught. You've got to be carefully taught. If you talk, you're gonna get shot.
Bird, check what we got. Mr. Lafayette, hard rock like Lancelot. I think your pants look hot. Lawrence, I like you a lot. Let's hatch a plot blacker than the kettle calling the pot. What are the odds of God will put us all in one spot? Pop in a squad and conventional wisdom, like it or not. A bunch of revolutionary manumission abolitionists. Give me a position, show me where the ammunition is. Oh, am I talking too loud? Sometimes I get overexcited, shoot off at the mouth. I never had a group of friends before. I promise that I'll make y'all proud.
Let's get this guy in front of a crowd.
I am not throwing away my shot. I am not throwing away my shot. Hey yo, I'm just like my country. I'm young, scrappy, and hungry, and I'm not throwing away my shot. I am not throwing away my shot. I am not throwing away my shot. Hey yo, I'm just like my country. I'm young, scrappy, and hungry, and I'm not throwing away my shot.
Everybody sing!
Whoa, whoa, whoa,
Hey!
whoa, whoa.
Say, let him hear you. Let's go! I said, shout it to the rooftop. Sit to the rooftop. Oh, come on, let's go.
Rise up when you're living on your knees. You rise up. Tell your brother that he's gotta rise up. Tell your sister that she's gotta rise up.
When are these colonies gonna rise up? 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 Rise up!
I imagine death so much it feels more like a memory. When's it gonna get me? In my sleep, 7 feet ahead of me. If I see it coming, do I run or do I let it be? Is it like a beat without a melody? See, I never thought I'd live past 20. Where I come from, some get half as many. Ask anybody why we living fast and we laugh, reach for a flash. We have to make this moment last. That's plenty. Scratch that. This is not a moment. It's the movement where all the hungriest brothers with something to prove went. Foes oppose us. We take an honest stand. We roll like Moses, claiming our promised land. And if we win our independence, is that a guarantee of freedom for our descendants? Or will the blood we shed begin an endless cycle of vengeance and death with no defendants? I know the action in the street is exciting, but Jesus, between all the bleeding and fighting, I've been reading and writing. We need to handle our financial situation. Are we a nation of states? What's the state of our nation? I'm past patiently waiting, I'm passionately smashing every expectation, every action's an act of creation. I'm laughing in the face of casualties of sorrow. For the first time I'm thinking past tomorrow.
And I am not throwing away my shot. I am not throwing away my shot. Hey yo, I'm just like my country. I'm young, scrappy, and